Well, let's go to the latest developments on world markets now, and I'm joined from Singapore by Grant Williams, Strategy Advisor for Vulpes Investment Management and author of Things That Make You Go, Grant, welcome.
Hi, Tiki.
Well, speaking of the Wall Street Journal broke overnight. Quite an extraordinary story, really. The ECB's, the central bank's Mario Draghi in Europe, suggesting now that senior bondholders take haircuts on Spanish bank debt. So you see this as quite a big story.
Yeah, it certainly is a big story. I mean, this came out late New York time last night, sort of 10 p.m. New York time, before markets opened here this morning. And it talks about a meeting back at the summit on July 9th where Draghi suggested that perhaps in Spain's case that the senior bondholders would have to take haircuts, only in the event of liquidation. And again, the details are a little sketchy. It's one article in the journal. But this is a very big story. If you start to force losses on senior bondholders, I mean, the implications for me are either he's taken a look at the banks in Spain and realised that they're a lot worse than Senor Rajoy has admitted to in public, or they're extremely worried that the level of losses at these Spanish banks could blow the ESM out of the water. And also they must be worried about the money that Ireland, which spent 60 billion euros protecting the senior bondholders, and that's which is about 40% of their GDP, and that's what led them to request a 67 billion euro bailout. So the significance of this, I think, could be quite big.
Yeah, well, let's go to Ireland first. I mean, presumably, if anything like this did come in, that's the Irish government would be pretty cross about it.
Well, the Irish government, maybe not. The Irish taxpayers, certainly. They would have every right to be
quite right. Sorry,
extremely annoyed about this. Yeah, but I mean, look, it's whether they understand what's going on and they can actually voice those opinions in a coherent way is to be decided. But certainly, I'm sure there'll be some very helpful lawyers that would like to take that case on.
Do you think, again, if it happened, it could lead to a significant run on the banks?
Well, it could do. The banks are by no means out of the water, and you know, this LIBOR scandal that we spoke about last week is continuing to increase in size and scale. The banks have got a lot of headwinds ahead of them. I mean, the LIBOR scandal now is spread across to the US. There's talk that the US are going to bring criminal charges against some of the traders at Barclays. Barclays are starting to point fingers at other banks around them. And so we're getting to that point where it's starting to tip towards there being a lot more political capital out of perhaps prosecuting bankers and putting them in jail than accepting lobby money. So if we cross that tipping point, then the banks, it's going to be open season on the banks for a lot of very powerful people.
Well, let me ask you about LIBOR, because one of the things obviously that's come up in the last 24 hours is that America knew a lot about this. Senior figures like Tim Geithner, and actually advised Britain several years ago about the possibility of manipulation of LIBOR.
Yeah, sure. I mean, the thing about something like LIBOR is everybody's interests are largely aligned. You know, the lower that LIBOR rates can go, particularly during a crisis like we saw in 2008, the better it is really for everybody. Everybody had a vested interest in keeping those rates low. Now, this isn't the first whiff of manipulation of government variety. And let's face facts here. Governments and central banks manipulate interest rates by definition. That's what they do. They set the interest rates right across the world. So manipulation of government manipulation of these markets is nothing new. But what we may find is that this LIBOR opens a can of worms that sets people off in search of other manipulations. And there's a lot of talk of manipulation in the precious metals markets. We've spoken about that before. There's an ongoing investigation, in fact, into the manipulation of the silver market by the CFTC in the United States. That's been going on for 2.5 years. It's still open. It's their longest investigation ever, and we haven't heard anything about it yet. So I suspect that LIBOR really is going to be the tip of a rather nasty iceberg.
How much of a sin, I mean, you're talking about possibility of criminal action being taken against traders at Barclays. How much of a sin do you think this is by the banks? Because I've just been in England for the last couple of weeks, and there are definitely two camps as to whether this is really bad or this was just how the system worked.
Well, because it's how the system works doesn't necessarily justify it. I mean, if you look at the numbers, you know, estimates are that it's $500 trillion which is pegged to LIBOR. So you only really have to move this thing a basis point in either direction to make, 1 basis point is a $50 billion transfer from someone's pocket into someone else's. So although we're talking very, very small moves, potentially we're talking enormous profits generated here or enormous losses, and the losses seem to be taken by the public who don't understand what's going on, and the profits are sitting in a bank's balance sheet somewhere. So people are going to want to get to the bottom of this, and it's going to be a very, very interesting ride.
Let me finally bring it back to Europe, and one commentator who I've read talking about if there was a run on the banks, that actually what Mario Draghi is thinking about now is that the whole system hasn't got enough cash in it in Europe to actually deliver the growth. Do you think that's possible?
I think it's probable. I mean, where is the cash? Let's face it, this whole thing has been a terrible, terrible problem with liquidity. They've been trying to address that for best part of 2 years now by pumping all kinds of liquidity into the system. It's just not flying properly. So there is a shortage of cash, there is a shortage of collateral, and that's, I'm sure, Mr. Draghi's primary concern right now.
Grant Williams, thank you very much for joining us.
Pleasure.